Hey, welcome back to the Mining Pod. We get your news roundup for you. We're going to hit this in about 30 minutes. Lots of stories from BitFarms to the TVA and the Department of Energy embracing nuclear, and then a cry corner with our mining mafia friends. So stay tuned after a word from our sponsors. Hey, this is Will with Blockspace. Did you know that we're selling BitAxe Bitcoin miners now on miningpod.shop? If you're interested in having a BitAxe sit on your desk, or maybe you want to orange pill a friend or a family member, go to miningpod.shop to get industry-leading pricing on BitAxe units. If you want to buy them for your company, maybe as a holiday party gift or something else, feel free to reach out to us at hello@blockspace.media to order custom bulk amount for a discount. Again, that's miningpod.shop to order a BitAxe today. Are you a retail or institutional investor interested in Bitcoin mining companies? The Miner Mag brings you free data and analysis from all major NASDAQ-listed Bitcoin mining operations to know who stands out. Check out visualized metrics and data-dependent stories at theminermag.com.
Today's show is brought to you by Digital Shovel. Digital Shovel is a leading manufacturer of modular mining pods as well as PDUs and switchgears. Unlike many other competitors, their product is designed and manufactured in North America with a complete UL inspection on the entire unit, not just individual components. Additionally, Digital Shovel is one of the most vertically integrated manufacturers of over 75,000 square feet of sheet metal shop, SMT and wave solder PCB assembly, as well as final assembly all under one roof in Toronto, Canada. Their price point leads the industry when compared to products with rates as low as $69,000 per megawatt for a complete data center with smart PDUs and switchgears. To learn more, visit digitalshovel.com.
Okay, welcome back to the Mining Pod. Nick is joining us from Luxor Tech. Nick is joining us from Luxor Tech, and then of course Matt Kimmel, our friend from CoinShares. How you guys doing this morning?
Yeah, doing really well. It's a hash price bear market, but hey, we're getting through it. We've been through worse, and a lot of positive trends on the horizon. So
happy to chat news today. Great to be here. It's a good bunch.
Good.
It's a good set of news items too.
I was listening to last week, so Matt, I thought we killed it. I thought we did a good job. It was punctual, it was informative, it was tasteful. So we're going to try to replicate that this week. And as always, we start off with a little bit of a difficulty forecast. So we'll pull up our page from Hash Rate Index.
Well, Nick's on the pod. We got to shout out the data provider here. Yeah, so we're showing 80% through the difficulty epoch currently. Blocks are coming in pretty quick. We're expecting an increase of 1.42%. And that's been what we've been seeing lately, right? I mean, I think this will make 8 of the last 10 difficulty adjustments increases. Hash price is in the dumps. We're at 40, what is that? Dollar per petahash second per day, 48 maybe? 40.
Yeah, 47.50, yeah, 47.50, 48.
47.
Who's counting at these prices though, right? You're just sad. So
yeah, unfortunately, we basically retraced the full, election pump of hash price, if you will, dating back to November last year. Fees down. I mean, this is kind of the state of where we're at right now. We're hoping for some optimism out there. I'll toss it over to Nick. What do you think?
Yeah, well, it's getting cheaper to generate hashes. That's just the bottom line. As it gets cheaper and cheaper to generate hashes, difficulty is going to increase because the same amount of energy produces more hashes. That's just bottom line. As joules per terahash goes down, hash price tends to follow. And the network is getting more efficient. We've seen on the brokerage side a lot more of the 21 Plus, 21 Pro, 21 XPs starting to show up. The latest gen What's miners starting to really ship and turn on. And that leads to increased hash rate at the same energy. So that's what causes difficulty to go up. Actually, something I thought was kind of interesting. We noticed when I was looking at the adjustment earlier in the epoch, it seemed like we were actually looking at a pretty minimal increase. So that means that blocks started speeding up over the last week or so. I think the last time I checked was sometime last week, and it was in this sub 1% increase. So maybe I think it was like 0.4, 0.5. And so that means in the last week that the blocks have been coming significantly faster. So, so we're seeing, machines getting turned on, machines getting refreshed. That's a pretty common trend on the brokerage as well. Lots of, it was kind of the story of Q4. All the pubcos were kind of announcing that they were getting ready to refresh the fleet. We're continuing to see that, as those orders got filled, machines are showing up. J-Pro's hitting the market, or I should just say, not just J-Pro's, but like the 19 series hitting the books, and folks trying to scoop those up to find cheap power or intermittent power, and then the top tier data center locations getting plugged in with the latest gens. So just kind of continuing to see the hamster flywheel, or the hamster wheel, continue to play out here. And I think folks are kind of looking towards a new model coming later this year.
Blocks are speeding up because there's a Tapper Wizards mint coming up, and people are so excited. They're just racing ahead to that.
It's magical, right? It's a magical time. Could be a bit of a fee event, It causes, ordinals and runes are, more or less dead at this point. So +1 to the maxis. That's maxis 1 million.
Very well played, maxis.
Yeah, well done, maxis. But that could be a pretty big fee, catalyst, I should say. Reason being is that, I don't think there's really a major fee mechanic in their mint scheme, but there could be a lot of like trading activity around that time. So folks that got mints and are looking to get liquidity, there's just going to be a lot of trading activity, which happens in the mempool. And, if folks are trying to, snipe trades and things like that, that can drive a lot of fee volume in a short period of time. Unfortunately, these things generally kind of tend to be a flash in the pan. So could be a couple days, could maybe be a week. We'll see. But leave it to Udi. He'll figure something out.
One question for you, Nick. I actually thought about this while you're talking there, is like, we did start to see some of the CBP border issues start to loosen up for some brokers. I'm aware of others who are not having as much luck. And I'm wondering if that might be a reason, like some of these ASICs that were kind of locked up are finally hitting, because it'd be like a week or 2 weeks after we've saw some releases, and maybe that's enough time for deployment. So
it actually, started hearing about a month ago, folks were held up relatively indefinitely. We started hearing about seizures in, call it like late October, November of 24. There's a difference between a seizure and a hold. And I should be a little more specific when mentioning those were holds, meaning they were held for further inspection, but they weren't officially seized. Seizing is actually like a legal process, where holding is just just an operational process. So they were being held for further inspection. And then in mid Q1, ones that were either well connected to a senator or something like that were able to get their machines released from their holds, but then started seeing seizure notices going out where I think a lot of folks have started getting seizure notices related to those batches that were held. Those don't seem to be moving. Can speak from firsthand experience that they're not moving. But there is, there's some light at the end of the tunnel. The Senator Lummis office is very aware of this. And there are, now lobbying firms that are trying to get answers, because at the end of the day, we're just not getting any answers from the government, from the CBP or the FCC. So the seizure notice that I'm aware of specifically lists the FCC, the CBP, Customs and Border Patrol, seizing these at the behest of the FCC. There is an email floating around from the FCC office saying, no, that wasn't from us. So somebody's not telling the truth. And I guess they're kind of trying to unravel who actually is putting these seizures out there, and why are they actually being seized. So there is some movement. We're actually getting more information, but it is operating at the speed of government. Bitcoin operates at the speed of lightning, and we're trying to get those timelines to match up, which is unfortunately not very easy to do.
Trump administration seizing miners and putting them in cages again. It's not good. Okay, let's go
objectively, it looks it. If you ask me, this is just an opinion. I have no facts for any of this, but it does kind of look like the outgoing administration just saying, I'm going to throw this wrench in your, in your plans. You raised all this money from all these, these crypto guys. This is a way for us to kind of stick it to you on the way out and wait for your new administration to unravel it. And during that time, us as kind of private enterprise are sort of caught in the crossfire.
Yeah, no, we're going to keep reporting on this story on Blockspace. The last bit we've kind of had from some sources is that the fees that are being accrued by these Bitcoin miners for basically holding penalties are reaching to like the millions of dollars for different companies. So that's not great.
Big players in Bitcoin mining demand stability, regulation, and trust. That's why NiceHash has moved its headquarters to Switzerland, a country known for its strong regulatory framework and for keeping its cheese locked in a safe. As one of the most regulated mining platforms in the industry, NiceHash provides institutional miners with a secure, compliant, and transparent solution to manage and maximize their mining output, delivering the reliability and performance expected from the best mining pools, along with firmware, monitoring software, and other essential mining tools. Contact a NiceHash representative today to learn why the top Bitcoin miners are making the switch to NiceHash. You can find out more info in today's show notes. And when you contact them, let them know the Mining Pod sent you.
Let's jump over to this story, though. It's sort of like off the beaten path for a second for the Mining Pod. I guess it is energy related. I just want to bring this one up because I thought it was within the general scope or interest of energy and mining, and that's launching America's nuclear renaissance. This is on the TVA, Tennessee Valley Authority blog page for one of their staff writers. And it basically just discusses how the head of the Department of Energy went down to TVA and talked about bringing nuclear power back to the US, specifically these small modular reactors, which have been thrown around for like over a decade now as being like an interesting tech problem to solve. I wanted to pair this story, which I thought was encouraging for Bitcoin miners, with a recent story also in the New York Times discussing CoreWeave. And we had their S1. We wrote about that on Blockspace as well. Headline in the New York Times, the company testing Wall Street's appetite for AI computing power, subheader CoreWeave, which provides a computing power for AI, was founded by 3 Bitcoin enthusiasts. The company is now set to make the first prominent AI initial public offering. I just thought these two stories together was interesting, where you have this new Trump administration that's obviously pro-energy. Drill baby drill has been a tagline for Trump forever, and they're really pushing forward with that. This nuclear element's also interesting because you got like the tech angle. And then this New York Times piece sort of like breaking that Overton window for people, like I say, in normie land to be interested in compute. Seems like that whole Green New Deal anti-energy interest is kind of like breaking apart as people get familiar with ChatGPT style applications, and they're like, oh, I actually kind of want something with a lot of energy usage. It's okay. I'll throw it over to Matt first to get your take on it, but also interested in if you have any reflections on these two pieces. Nick?
I'll chime in first. So you mentioned the Green New Deal. There was a lot of private capital, right, going into renewable energy, but I mean, the uptime requirements of the HPC AI kind of focused data centers, right? It kind of, we may see a transition into more baseload reliable power sources like nuclear, right? That may be a happy marriage. And people have been talking about, Bitcoin and small modular reactors for quite some time. Bitcoin miners, of course, that is, are, they provide a flexible load. And they could justify an investment into some of this power infrastructure. So I think it is interesting. I do think this is relevant, Will, to your point with our sector. And I think we've seen a lot of the companies, public companies, right? But you also can imagine that it's happening privately as well, kind of marrying the two, where you have AI and Bitcoin mining kind of at the same site. Using the same power sources, and taking advantage of, okay, you get Bitcoin upside with mining and the flexible load. Perhaps when your contract runs out with an AI buyer of sorts. But that's kind of how I see this. I'll throw it over to Nick.
Yeah, baseload is kind of the backbone for any grid, right? There's and always going to be some level of demand on a grid. Now that we live in the 21st century, that was, not the case maybe 100 years ago, but now we've gotten to a point where there's always going to be some amount of demand on the grid. But that changes very drastically over time. And so these renewables introduce that intermittency. And if we can increase the amount of baseload, and then of course, it provides more stability to the grid, basically providing a floor. The reason you can't just ratchet up baseload to the max is because it's very hard to spin down. For example, a nuclear reactor is hard to spin down. And so if there isn't enough consumer of that power, then you have to start spinning down your nuke site, which is hard to do. Or at least it's the way I understand it. And maybe it's getting easier as technology gets is improved and things like that. But so that's really like the conundrum. Do you want to talk about coincidental peaks?
Let's do it. Let's do it.
So I mean, so basically, the way that these folks that have demand are charged for what's called the transmission cost. The transmission cost is the cost of actually providing the wires and the big metal transmission lines that you see all over the world, especially in Texas and other places. But those things are expensive to build, and the way that they recoup that cost is by introducing transmission costs. And the way that you get your transmission cost is priced is they're basically looking for a way to add, basically looking to make some revenue for folks that are what they call the marginal demand. So the increased demand in a particular area, they're like, okay, we need to add more transmission to that area. How do we measure that? So they look at it by the amount of demand that's being used as what we call the 4 coincidental peaks, the highest demand over a period of time. Usually that happens in the summer in Texas. And so that's kind of what 4CP stands for. It's a way to measure how much demand you have during the highest demand periods. And that's how they determine what's called the marginal demand. And so that's, and then you get your pricing changes based on that. Now, okay, kind of trying to set the parameters here. So the reason miners are interested in 4CP is because they're generally not the marginal transmission. They're basically like, we can come in and use existing transmission, so we shouldn't really have to pay for like the next batch of transmission upgrades. So what they do is they avoid those 4CP events. Basically, those measurements, they want to be at zero. So they're not being charged in the next year for adding new transmission. So they all start playing this 4CP, it's called 4CP avoidance. They basically play this game where they look, they have some provider that gives them data that says, hey, we think tomorrow at 4 p.m. is going to be a 4CP event. You should be turned off at that time so your charges aren't increased the next year. But it's gotten more and more difficult now that, so much of the demand, especially in ERCOT, is from these large flexible loads. They're like, I'll just turn off. I don't need, I'll just turn off. Well, if everybody turns off at one period, at one interval, then it doesn't become a 4CP event. And then you have to reevaluate your models. So it's kind of like this chicken and egg, or I shouldn't say chicken and egg. It's like you're basically trying to front run the front runners, that sort of thing. So it becomes a very quantitative approach. So ERCOT's gotten wise to this. They realize 4CP is something that large flexible loads can gain pretty easily. And so what they're going to do, and I believe that's coming probably this year, they're going to move to a 12CP, meaning effectively every month they will take your highest demand and factor that into your next 12 months bill. And so now it becomes even more, you have to get even more sophisticated and think about, are these CP avoidance techniques every month as opposed to just the 4 summer months. And so, anyway, that's kind of some news around specifically ERCOT, but I imagine there will be others that kind of follow suit because 4CP is not just a Texas thing. It's the most prolific, but all of the ISOs or the energy grids in the US have some sort of CP type of charge associated with their billing.
Only on the mining pod are you going to get the intricacies of 4CP in one show. So thanks for that, Nick.
Yeah,
Matt,
I'm sure some of these energy guys are listening to me kind of fumble through how this works, and no, that's not exactly how it works. And you're probably right, but in general, that's more or less how it works.
Not to move us away, but there's actually some breaking news while we're on the show, and so we can jump over to it really quickly. And that is that the SEC has put out some guidance relating to proof of work mining activities The SEC has put out a statement concerning proof of work mining activities. It's going to be a short segment because honestly, it doesn't say much that we don't know already. So I threw it in the old chat GPT blender. And essentially all it says is that the SEC has clarified that standard proof of work, including solo pooled mining, does not involve securities transactions. Not much more from that. And we've known this forever. The only thing that I didn't see cover in this notice from the SEC was cloud mining. I think a lot of people in the United States have moved away from the cloud mining model. We had BitFufu on the podcast earlier in the week. They don't offer their cloud mining service to anyone in the United States. And there's also just a proliferation of hosting services, which have some similarities to cloud mining, but are technically not cloud mining services. It does not seem to be covered within this to my 30-second review. But really quickly, any thoughts on this from either of you guys? Nick?
It is nice to just have it reiterated. I think there's enough there's enough case law or precedent set that generally the stuff that they're already saying has been out for a while and is the general belief of our industry. But it is nice to have it reiterated once in a while. I don't, like you said, I don't see anything here drastically different than the way we kind of operate today. But just clarifying and reiterating that is powerful in itself. Anything, Matt?
Per the White House posturing in the past, right? If all the Bitcoin are going to be mined in the States, there's going to be the Bitcoin capital of the world. You have to encourage Bitcoin mining here. I guess that kind of clarity is a start.
Yeah, that's nice. I mean, and Trump this week talked to the Digital Asset Summit here in New York. Blockworks is throwing. So obviously there's a lot of pro-innovation, pro-tech coming out of this new admin. Let's move over to probably the biggest news this week, which is BitFarms finally securing the acquisition deal with Stronghold Digital Mining. So we're looking at a press release from them. Basically, this kind of goes through what we already knew was going to take place. It seemed to take a little longer than anticipated. Sometimes these M&A deals can kind of drag on. But essentially, BitFarms has entered into or has finally acquired Stronghold. The biggest part here, I think, like if you're going to walk away with a take, is BitFarms is really trying to refocus where its megawatts are deployed. I believe this acquisition moves them to like about 60% of their megawatts are here in the United States. If you listen to the show consistently, you'll hear us talk about like what is the value of a megawatt in North America versus the value of a megawatt not in North America to investors. And I think you can clearly see which side of the fence BitFarms is on. They want to be deploying megawatts here in North America because I think they think that the market is going to value those more. We're also looking forward to seeing more information around HPC and AI from BitFarms. They have hinted a few times that might be in the future for them. And then that this also secures a few additional things like a larger power pipeline for them in the future. This PJM market, which a lot of miners have dipped their toes into. And then lastly, I would say that BitFarms kind of inherits this nice waste coal narrative that Stronghold had for quite a while. This is one of the largest acquisitions in this space in quite a while, to my knowledge. And I think it's just funny to think back on like Riot and BitFarms had the whole thing. That didn't happen, but this one did go through. And what does that do for BitFarms going to the future, especially at an inflection point where BitFarms stock price has been not holding up super well? Does this sort of like tip them back into favor? At the same time, the entire profile for Bitcoin mining stocks over the last 6 months, really since November, has been pretty weak as well. So just some threads I wanted to pull on here.
Yeah, I mean, I guess I'll just add, right, that this is clearly a part of, if in a ruthlessly free market that is Bitcoin mining, you have to have a power strategy, right? You have to have like a dedicated, you have to know what you're going to do in that respect. It seems like this move was largely predicated on that. I guess, some notes from the press release, right, is just that they're going to, they specifically cite AI, HPC, and demand response. Bitcoin mining companies, of course, are primarily betting on unit price transaction fees in the future, but everyone gets a little bit more business model flexibility when you have kind of extra revenue streams, and you play with the assets that you have under your hood, right? And your power and your data center. infrastructure is at the center of that. And so that's what BitFarms is doing.
In the competitive world of Bitcoin mining, one name stands out: CleanSpark, America's Bitcoin miner. At CleanSpark, efficiency isn't just a goal, it's our standard. Our sophisticated facilities are built and led by expert teams who care about Bitcoin and the communities we work in. Scale? We've mastered it. Our large-scale operations have set us apart in the industry as examples of community-oriented building. Our track record speaks for itself. We navigate the complexities of the new economy with precision and with skill, continuously achieving operational milestones. Curious about how we do it? We invite you to discover the story behind CleanSpark's success at cleanspark.com.
We'll move over to the Blockspace original piece this week, which I think is definitely worth all of our time.
I saw you guys break this news. How did you find this?
How did we find this? I can't give away the sausage factory ingredients, but okay. We have our sources out there. Someone tipped their hat to us. The story we're referring to is Foreman and Cholla. Or did they say Toya Energy? Or do they go full Texan and do just Cholla?
I don't actually know. I say Choya.
Choya would be correct, but I wonder if they go like Tex-Mex style with it and do Cholla.
Could be.
Yeah. Anyways, I'll do Choya. Foreman and Toya Energy score patent win in dispute with Lancium. So we dug deep into the USPTO filings this week to pull out this one. Energy and data center firm Lancium suffered a legal setback after conceding an inter partes review challenge at the U.S. Patent and Trademark Office. U.S. patent number 11,016,456, which described a method and system for dynamic power delivery to a flexible data center using underutilized or unutilized energy sources, was jointly challenged by Bitcoin mining firms Toya Energy and OBM, also known as Foreman, in May 2024. Essentially, Lancium decided to file a motion for adverse judgment, saying that they're basically kind of giving up in this case, and that nullified all 26 challenges to the claim, essentially opening the doors for anyone to be able to move forward with using this technology. We got a quote from the OBM team. At a high level, while Lancium was required to respond, they instead filed a motion for adverse judgment and disclaimed challenge claims 1 through 10, 12, and 14 through 30 of the patent. This means the IPR proceeding was terminated and the challenge claims of the patent are no longer enforceable by Lancium. A fantastic win for OBM. So if you're listening to this and it all sounds like technical jargon, you're a little bit correct. But this is actually a pretty big deal for the Bitcoin mining space. What it essentially details is that Lancium had certain patent claims around the use of underutilized energy sources being paired with compute and then using those in tandem to be able to mine Bitcoin or other generalized compute. And this patent was stopping people like OBM, like Cholla, and others from being able to monetize different energy sources through compute. And so Lancium and Toya teamed up a few times, actually, if you look at the court records, to put pressure on this patent. And in this case, they won. There's still one more patent out there. And we've asked for clarity from both Lancium and Foreman on what this other patent still means, and if people are able to move forward without fear of legal repercussions. But I'd say at this point, we know that there is more clarity for people who want to enter into this game. Nick, I'll throw it over to you because I feel like you'll maybe explain why this matters a little better than I did.
Basically, what happens is anytime somebody's doing controllable load resourcing, they run into Lancium because Lancium has a patent on that. A good example of one of the companies that would probably still exist today if that patent didn't exist was Layer 1. If we remember Layer 1, that was like a very exciting company from the previous cycle. They were more or less taking S9s, plugging them in, and using them to monetize loads that otherwise would be unmonetizable doing this. And Lancium ended up filing a suit against them, and that caused them to more or less kind of give up the ghost or give up their efforts. And so I don't have a dog in this fight, in either form. I'm generally kind of anti-patent in general, because I think there are some things that should be patentable, but I think in this case, I'm not sure if this one should be. It seems like you should be able to kind of use energy the way you want to freely, without the nuance of having to make sure that you're not infringing somebody else's patent. So I'm not sure how this affects my business directly, but in general, this should lead to a little bit easier and more elegant demand response solutions in Texas, where folks otherwise had to kind of tiptoe around those patents.
Gotcha. Yeah, I mean, we had a bunch of people kind of find this story interesting, reach out, talk about it in some of the chats. And I think it just kind of struck a nerve with some people, just because they've run into these Lancium patents in the past. Patent trolls are a thing, not saying that Lancium are, but just the fact that was in the way for people to do this process, which is pretty important for Bitcoin mining, speaks to it. Matt, any thoughts on this story before we jump over to our Cry Corner?
Yeah, it's a win for Bitcoin mining companies that want to play in energy markets, right? We talked about this show already that, these companies can provide a flexible load that creates some flexibility, some creativity, and the types of business models and revenue streams that they could have. And if this was a hindrance, this patent, to some of those strategies coming to bear, then, it'll be a positive, I think, moving forward, especially where hash price and kind of the mining economics are at the moment. But we'll move to the next story, Will.
Which is a sad story. So this is from the Bitcoin mining stock guy on Twitter. He's sharing screenshots of engagement in the mining mafia community. So if you're not on Twitter, and if you're just one of our podcast listeners or on YouTube, one, we appreciate you listening. And two, the mining mafia is an awesome community on Twitter that talks all things Bitcoin mining, mostly just focusing on mining equities. And every week, Bitcoin mining stock guy who kind of runs the community, he's an anonymous guy. He shares like the analytics from the chat. And he posted today the numbers from November of 2024, so not too long ago. And they're really good. Like, there's tons of engagement. There's like 3,000 new posts in 1 week. There's over 600 people participating in this. There's tons of replies. And then we go to this week, and the numbers are just quite different. Only 700 new posts, 177 unique posters, reply count's down, like count is a fifth of what it was, no one joining. And we've also seen like this community drop in terms of the amount of people participating. And I think that's not a knock on the community, because it's honestly pretty solid, but it's more just a note on like the interest in Bitcoin mining right now is once again at a lower point. So I want to get your guys' thoughts on it. Like, are we kind of at the bottom for this? The mining pod has been around through many of these low points, and we continue to podcast through them. And we will continue to podcast through them. Do you guys think this is like a low point for things, or how are you guys feeling on the sentiment?
Yeah, in general, we always say, does hash rate follow price, or does price follow hash rate? I'm a firm believer that hash rate follows price. And so does engagement. We see it across all of our engagement metrics, that when price is up, engagement is up. When price is down, engagement is down. And in this case, stocks, mining stocks have kind of been getting obliterated since those posts were made. And so the FOMO is not as real, and people post less and refresh their portfolios less and feel like they want to go consume information about the stuff that they put their money into when their money's down, or when their portfolio is down significantly. So I would say we're definitely in an engagement bear market. Does it mean that we're at the bottom? My good friend Jay Bedict and I have a joke. It always gets worse before it ends up getting worse, and so it could continue to get worse. But who knows? Well, if I could see the future, I probably wouldn't be on the podcast. So that said, are there any bullish catalysts kind of on the horizon? I know folks have been talking about the SPR a lot. I'm not a huge fan of the SPR in general, just because I got into Bitcoin because of the not wanting to be reliant on the government, and then having to have the government pump our bags. I don't really just like that as an ethos, but But I'm not sure what the bullish catalyst will be for price to go up and thus engagement right now. But good thing we're here for the technology and not for the price.
Yeah, what's interesting about engagement is I was looking at the dates, and when you showed the first screenshot of really high engagement, it was like right at election time or just after election time. It was like mid-November.
Yeah.
And there was so much hype, right, about what could come in this industry. But like you look at where it is now, right, and how much has dropped off sentiment wise. Yet if we were to look at like where the Bitcoin price actually was, and I honestly tend to agree with you, Nick, on what you just said about, price and sentiment. But what's funny about Bitcoin is like everyone has this really short memory of things. And that I think price is actually about the same point as it was now and then. Although what the difference is, if we went up to about 108, right? I think we went to when we went to 76K, it was a 29% pullback. And like, all of us on this podcast, right? That's not extraordinary. You see pullbacks of, 20% plus, consistent across cycles. It's kind of par for the course. You become a bit immune to it. But when there are those crazy pullbacks, right? And you've basically come back to the same price point as you were a couple months ago when everyone was just juiced up, the sentiment is so different. It's just so different. And to your point as well, Nick, I don't know what will be the taking off point. Again, it could get, it could get worse before it gets worse and we enter like a, bear market. It could get worse before it gets better. It could just get better from here. But if we launch back up to 100, the sentiment's going to go crazy and that group's going to have a ton of attention. I'm sure of it. Will, I want to turn it over to you because you do run a media company and are in the
the engagement business.
Yeah. So what do you think of this? And where do we go from here?
It's rough right now. Like the correction stuff has been interesting. I've seen a few people tweet about that. I think like Dan Held had a tweet about that. Like it's 20% correction. We've been here before. The difference between like a 20% correction in other cases and this time is it does seem like there's a lot less interest. If you ran a Bitcoin conference right now, I think it would be harder to get tickets for people to buy tickets. So I'm interested to see how Vegas goes for the Bitcoin conference in May. We still have a lot of time between then and now, but that's going to be probably the best indicator of like how many people have actually lost interest in it. For Bitcoin mining stocks, like it is a difficult business to pay attention to because things go up and down so harshly, right? It's a beta play on top of Bitcoin. And so people are in it for the volatility. They're in it for like the really harsh, fast gains. But there's a lot of Bitcoin stocks out there. Most of them are down 50% year to date. And that's just part of a lot of the risk assets. So yeah, everything's down right now. But there's still time to look. There's things to look forward to for sure. Okay, we can close out there. Thanks for joining us for another production of the Mining Pod. If you enjoyed this show, you'll enjoy our other shows, including Bitcoin Season 2 and The Gort Show. Lastly, go check out our newsletter. Go to newsletter.blockspacemedia.com for the best content 4 times a week to your inbox. Matt, Nick, see you guys next week.
Awesome. Thanks, guys. Appreciate it.